Thanks, Roland. I've got to canter through, I think, my 20 minutes, so I'll just crack on. And I don't know if I'm right dominant or left dominant, but I'll do my best to deal with the pillars in the middle. My name is Bruce Dingwall. I'm Executive Chairman, as was introduced, of Trinity and founder of the company, actually. I'm a geologist, kind of stroke geophysicist by background. I grew up in Trinidad, where my father was a doctor for 40 years, in the oil field, actually. Educated back here in university back here. Started my career with Exxon, in the North Sea, based in Leatherhead. And then I went on to join a British independent called LASMO. Spent 13 years there, most of it overseas. Ultimately exploration manager in Pakistan. We went and found 2 or 3 TCF of gas, and on to Indonesia, where actually we kind of broke the company up over the period I was there, but I learned a lot on the way. Then I founded venture production in the North Sea in the very late 90s, took that public in 2002. Timing was perfect, oil price was low, nobody was doing this in the North Sea, and that was taken out by Centrica for £1.3 billion about 7 years later. Other things I've done, chaired the executive chair of the biggest spin-out, I think, in university history in Britain still, which was a geophysical application of Edinburgh University, MTEM. Raised $11 million, and we sold it to PGS for 275 2 years later. And I owned a distillery for a while. And I didn't drink whiskey then, and now I do, and I've sold it. But now it's Trinity. I do some charity work in Edinburgh, where I'm based. There's 5 of us in this part of the world doing PRIR and some high-level thinking technically, and all the rest, about 210 folks in Trinidad. Disclaimer, Trinidad, why Trinidad? It's a phenomenal, as I was just explaining to a gentleman in the front row, Trinidad's not quite what you think. It's 6 miles off Venezuela, but it's English law. The Privy Council in London is still the final court of arbitration, but it's a phenomenal petroleum province. It's been producing for over 100 years. It's actually BP's 3rd biggest production hub in the world, but they keep that quiet. It's the 7th biggest LNG producer in the world, does over 700,000 barrels of oil equivalent today, mostly gas. You can see the gas fields in red down in the southeast Columbus Basin, green onshore and nearshore. And actually, during the war, Trinidad provided most of the aviation fuel for the RAF, so it was a big, big push back then. So phenomenal basin in terms of the rocks and the geology. And you've got everybody there. So from the onshore to the offshore is about 150 kilometers, and that's a bit like Midland, Texas to deepwater Gulf of Mexico. You've got family-owned rigs, you've got family-owned oil companies, and you've got Shell, and you've got BP, and a big LNG plant. And there's a bunch of independents working out there as well. And a highly educated workforce. There are 2 universities in Trinidad. Trinidad is like London. It's suits and ties. People go to work at between 4 and 5 in the morning. They finish at 4 or 5 at night. An incredible ethic. Very, very bright group of people. We are local. Very proud to say. Everybody employed in Trinidad is a Trinidadian. I thought it was about time that was the way it ought to be. And because of that, we're seen very differently in Trinidad. We're very much, in Trinidad, seen as a local company listed in London. Here, we're listed in London, but we've got assets in Trinidad. And we produce 5% of the black oil in Trinidad, so we are important to the country. We're very lean, back to the venture model, where we're a very, very low-cost operator and a very low oil price break-even. We're down to $26, $27 break-even, which is pretty good around the world. Innovative, these are some very, very old oil fields, particularly onshore, and we're digitizing them right now, and I'll go on to describe that. So we're bringing some pretty new technology and applications to bear onto old wells and old fields. I've talked about the type of basin that it is. It is absolutely world-class. And we managed to grow our reserves by 80% over the last couple of years, testament to the oil in the ground. We're kind of full cycle, so we're pretty low risk. We drill infill wells between other wells. We have an offshore development, and where you've got to think of Trinity as a cash machine, as a manufacturing business. And very importantly, the board owns about 23% of the company, including myself, own a chunk of that. So As I say, I don't get out of bed in the morning, I leap out of bed in the morning. It means we behave as owners, not as employees. This diagram is a lot on it, but it just shows where we've come from in the last 5 years. Here is the realized price that we've got for our crude through that time in the grey bar, going like that. Our G&A, so our overhead, in yellow, and our OPEX per barrel in the lighter grey. And you can see from the heady times when oil was $85, $90 a barrel, we weren't making a lot of money. We had to go through a restructuring 2015-16, where we completely changed our business model and the entire management team, such as we've climbed out, going through up to today. Over the last 4 or 5 years, we've turned around everything. So I've talked about OPEX per barrel. There's our production, about 3,500 barrels we were 5 years ago, dipped down, back to reinvesting, up we go, and hopefully, by the end of the year, we'll see it up here as we're back to drilling again. But the most important thing is that this is our EBITDA margin. So that's the margin, if you like, that we deliver on every barrel that we sell. And that margin, our profitability, is continuing to climb. And our costs continue to fall. So our operating break-even continues to fall, and our G&A continues to fall. Our production rises, so our earnings go up. It's pretty simple, but a hell of a lot of work. And this just shows at the bottom, over that period, the key performance indicators, if you like, have all gone in the right direction. We are now a free cash flow generative business, so we will always generate, based upon drilling 8 wells a year and growing production between sort of 5 and 10% a year, free cash. There is one period, if the oil price stayed between $50 and $55, that we would not generate free cash over a 5-year period if it stayed in that, because of a tax called supplementary tax that kicks in at that price. But we ameliorate that through hedging. So we've got over 30% of our production now hedged between $50 and $55, and I'll go on and talk about that in a minute. So, but the best way to hedge against any onerous tax is to have very low operating costs. So we have a natural hedge built into the business that through the cycle, we're generating free cash. And it's taken us that 5 years to get to this point. But also, we've got a bunch of levers that we're still pulling. Operationally, reducing cost. We're doing that through this digitization of the oil fields that I'll talk about, having less people out in pickups, going around all our wells, for instance, and optimizing production through a SCADA system. Also, we just drilled the first high-angle well. Rather than drilling all vertical wells, we've drilled a high-angle well to expose more reservoir to the well, and I'll talk about that in a bit more detail in a second. And also, financial levers we talked about, hedging in particular. And we believe there's further tax reform coming our way in the next year or two. So, at $50, where it doesn't look so good, we've got a bunch of levers that will ensure that we're free cash flow generative, even at that price. So SCADA is, this is a pretty old technology, but a new application, if you like, which is supervisor control and data acquisition. So nuclear plants, power plants, pipeline systems, many types of businesses use SCADA to monitor tank levels, to monitor processes and control. We've been working with Weatherford, and actually the first people to ever use this in Trinidad, particularly in the onshore and nearshore. In earlier this year even, our operators go into the field every day in their pickups, and they go around all our top wells. They look at the wells, they look at the tanks, they gauge how much oil is being produced. We also then shoot fluid levels. So every well has a fluid level. The fluid level reflects how much oil is in the well. If you're producing it too hard, the fluid level goes down. If you don't produce it hard enough, the fluid level stays right at the top. We had to manually go through that exercise, probably on each well, probably only once a month or once a quarter. This system measures that every 10 seconds on every well. And every 11 minutes, it decides what it wants to do, chucks all the data into an algorithm, and we now have a variable speed drive on the top of the pump, and it'll make the pump speed go up or go down according to the inflow into the well. This, I think, will have huge impact for us. And this is, if you look at other companies around the world, Diversified, some of you might use this on all their gas wells in the Eastern Appalachia, and with fantastic results. This stuff just moves up by 4G to the mobile phone network and then straight to our operators' computers. So it's not just about more oil. It's also about delaying the decline rate. So we normally decline our wells at 6 or 7% a year. If we can decline them at 2 or 3% a year, well, that's hundreds of thousands of barrels and millions of dollars, and extra barrels we can book on an annual basis. So we've got 2 of these working on 2 different types of pumps, and they've gone pretty well. We've seen interesting results, all positive. We're going to roll that out over the next few months to 30 or 50 of our top wells onshore. But also as an operating cost saving, because those guys haven't got to go out in the pickup every day and drive up and down the road and change belts manually on pumps to change speeds. It all happens automatically. So it's very exciting. It's fairly routine, but I think it will have a dramatic effect on how we go about our business. This is a high-angle well. Now, these are drilled all over the world every day. I mean, shale oil and shale gas is driven by high-angle and horizontal wells, but nobody had drilled one in Trinidad, even though onshore Trinidad has got 20,000 wells. There'd been no need to in the past, and nobody had really worked towards it. We haven't gone fully horizontal, but we've gone about 47 degrees into the reservoir. But not far off horizontal, because the bed's already dipping at 55 degrees. Just shows the time depth curve. We drilled it very carefully and very efficiently and got down to TD, total depth, on time. And what this then shows you here is if this well was drilled vertically, that's what the sand section would look like. Because we drilled it at high angle, you get an expanded sand section. It's the same sand, but you've intersected at a higher angle and therefore exposed more sand to the wellbore. And there it shows, what the prognosis was pre and post drill. So it came in better than prognosed. So this is what we used to do, vertical wells. This is what we're trying to do here as a first step. And ultimately, you want to go bed sub-parallel, a true horizontal well. A true horizontal well should, if you look at all the papers written on the well, give you 3 to 5 times what you'd normally expect for initial production and give you bigger reserves, a longer life for the well, and obviously a greater NPV to the well, much greater value. So we're identifying more areas where we can do more high-angle wells and ultimately get sub-horizontal. This is the real data from the high-angled well, so we've got to be very careful. I've always said we will take our time and we'll stage this well up. The red crosses are the real data. As we draw down the pressure in the reservoir, production goes up. This photograph down, this slide rather, this blue line here is the what is it? I can't see sideways on. It's the blue line, yeah. So it's the fluid level that I talked about earlier. So we're pulling that down to get the pressure down the reservoir and get production up. But so far, it's performed exactly as prognosed. It's doing about 85 barrels a day, but we go very carefully. One thing we did think this well would come at us, it would start to produce sand. So we have a very expensive gravel pack completion, $200,000, and we've not had to use it yet. It's not producing any sand at all. So this is what you want our wells going forward to all look like, if they possibly can be. This well would have normally come in at 30 to 40 barrels a day, and it's currently doing 88 and is clearly prognosed to go to well over 100 barrels a day. We have an offshore development. This area is off the east coast that I showed earlier on, and it's in very shallow water, sort of 40, 50 feet, and it's pretty simple. We currently produce from the Trinity field, these 4 platforms here and those wells illustrating the trajectory. Reservoirs are very shallow, from a few hundred meters down to about 3,500 feet or 2,000 meters max. And strangely, the Trinity field was developed in the early 80s by Tesoro, because when they shot seismic back then, it was very early vintage, and they just saw a rollover to the feature and drilled that, and it was never developed any further. We drilled this well back here very expensively 5 years ago and intersected all 6 sands, all hydrocarbon bearing, further up the structure. So this is a reverse development. Normally you start on the crest and you work down in normal oil field development. We're going back up the structure, so it's very, very low risk. So we're working on putting down a 5th platform, which we call Echo. But we're going to do this differently. We're looking at thermoplastic pipelines. So 5 years ago, the pipeline cost was $35 million for a metal pipeline. Thermoplastic, $5 million. And thermoplastic lines are now used in ultra-deep water, Angola, high temperature, high pressure. And they come on cassettes, and you roll them off the back of a service boat. We're also, unusually, going to power it from shore. again, with all the development in windmill technology and offshore technology, we can buy cable pretty reasonably and lay the cable 11 kilometers out to the new platform. We'll also electrify the old platform, so there's no need for heavy generators, there's no need for diesel storage out there, there's no need for people to be out there, and we don't need all that weight on the platform, so it'll be a super light platform, what we call a conductor-supported platform. So actually the legs of the platform are where the wells go. And we're at pretty late stage between two contractors, of which one will get the work to deliver that platform. So that's all working towards a decision probably towards the end of next year, what we call FID, which is a financial investment decision to be made, but all going very well. And these are very meaty reserve numbers. We're looking at individual wells at Trinita's here doing 1,500, 1,800 barrels a day. We're looking at this just from 8 wells, averaging over a 5-year period, sort of 4,000 to 5,000 barrels a day. On top of our current, just over 3,000 barrels a day, you can see what this will do for us. We will, though, look to how we're going to fund this. We will look to farm down some of it if we think that's correct. We're surrounded by competitors here. Perenco surround us completely. They operate 3 platforms off to the east of us. We've also got BP, have huge infrastructure here as well for processing oil and gas. So there's many different ways that we will be able to fund that, but we won't even start looking at that until we've got our project sewn up and we know what all the costs are. But it's a big move for us. We've then got the reserves. We don't need to go exploring. We have all the reserves this company needs to go and deliver these projects and take this company to 7,000 to 8,000 barrels a day in the next 3 years. So it's a very low-risk machine. And this just shows the real data back here of production for the last 5 years. That bit there is when a tropical storm went through, and we always show the real data. You can see it kind of goes up and down. It starts going up again when we start drilling again. It's as simple as that. And the blue bit's the onshore, and the light grey bit is the offshore. So we've just started drilling again here, so you'll see that tick up as we're allowed to show things as we go forward. A bit touchy-feely. It all sounds, I stand here in a lovely hotel, but there's 200 people in Trinidad working their socks off in the hot sun, and it's hard work. Operationally, though, like we did at Venture, we've got a very different culture. It's a very tenacious culture, but collaborative. Obviously, safety, everybody talks about it, but Trinidadians are particularly strong on safety, I would say, because of all the plant that runs in Trinidad, actually. So they're very used to it. But we're absolutely driven by production and cash. Production and cash, production and cash, production and cash. That's all that matters financially. But we're always looking to innovate, support each other, and always seek a better way of doing business. So there's a lot of learning goes on internally. Every other week, there's in-house lectures given by each individual group to educate the other groups within the business. Production-wise, new wells and innovation. People talk about drilling new wells, but you've got to spend an enormous amount of time protecting your base production. That's all about protecting that base that I talked about through SCADA, through drilling more automated wells and higher angle wells. So the digitization of our oil fields is phenomenal. And the OPEX saving, I think, will be staggering. And every dollar we save on OPEX is about $1.3 million to our bottom line every year. And we are working to even bring down OPEX further. As I've talked about here. One thing we can do with the SCADA systems is when we can see a well is getting to the point where it needs a workover. A workover means you've got to bring a small rig on it, either get rid of sand, pull the tubing, pull the rods, pull the pumps, do something on it to get it back in production. We will be able to, and are beginning to be able to see when wells start to fail. So rather than saying, oh, boss, the well's gone down, let's get a rig out there in 3 days' time, 3 days lost production, we'll be able to predict when they're going down, just using the algorithms, use it to predict when it's going to go down, and then much better be able to plan when the rig arrives and have much less downtime. So that well will not be off for 3 days waiting for a sand bailout job. It will be done prior to the well going over. So I think, but we're learning on that. We're still doing a huge amount in understanding what that means, but it'll be much better on our planning side and data management, and always trying to innovate as we move forward. It says I've got 1 minute left. Just back to this, so kind of why invest? Bottom line, we've nailed our costs. They're going down even more. Our operating break-even, as you can see, is down to $26. G&A is very low. Our production's going up, and our operating costs are fixed. So every day, as production goes up, we are more and more profitable. And the market's yet to catch up with us. We're an unusual company, our name, because we're not an idea, we're a business and a production business. I was just going to leave that one to sink because it says I'm about done, and I was going to say thank you, but then I'll come up to that one.
Bruce, thank you very much indeed. Okay, challenge on both sides now. Any questions for Bruce? Please raise your hand. Gentleman here. Okay, we'll start with that.
I'm curious why you've only just started doing diagonal drilling. I mean, it seems so intuitively obvious that it's got to be better than just vertical drilling. How come it's taken so long?
That's a personal push from me, actually. The current operators there, and some of them do very, very well, some private companies, they just go for gapology. They don't even employ subsurface teams. They go out in the field, they look where there's a gap between wells, and they drill a well. You've obviously got to get permission from the ministry and the National Oil Company to do that. But that's what they've done for 20 years. So actually our learnings they're beginning to look at. But we have competitive advantage. Baker Hughes helped design the well and drill it with us. And you would expect in 3-4 years that's what everybody would be doing. But if you haven't got the right mapping techniques, then you don't understand the dip of the rocks. You can get it very wrong very easily. So you've got to really, really be intrinsically, you've got to map to very fine detail on these things to get the dip of the rocks right so that when you enter it with the drill bit, you're going in the right direction.
Presumably horizontal drilling is more difficult again, is it?
Another level up. We've talked about 3D seismic. There is a 3D seismic database that belongs to National Oil Company Heritage, which is has been reincarnated in the last 12 months. We are assured we'll get that one day over our licenses. They're just working out the pricing on it right now. Once we've got that, then we'll be able to go sub-parallel because you will absolutely be able to nail the dips of the rocks. You're going a bit blind if you're just using well ties and maps made from just well correlations. But absolutely that's what you want to do. You want to get into the sweet spots and stay in them. And these days they can stay in the sand this height, and they can stay in that for hundreds of feet, not an issue.
Thank you.
Question here?
Hello.
Okay, hold the mic.
I've never heard of digitization being applied to oil extraction. I mean, are you, a company that specifically unique in this field?
We are in Trinidad. They use a lot in the US. I mentioned Diversified. They've got something like 50,000 wells using this methodology. We've got it on 2. But it's what's quite difficult to get your head around is taking new technology and applying it to old things and old processes. People don't really see how it fits. I also think, we've got over 1,000 wells of inventory. We only produce from 190. I think it's going to lift the most uneconomic wells out of being uneconomic. But that's work yet to come. So we might be able to go back and turn on another couple of hundred wells that we've just left because 5 barrels a day is no good to us, but if we can get it to 10 barrels a day because of using a SCADA system on an automated pump, then maybe it's worth doing. But we are leading this in Trinidad. We've always done it offshore with the Schlumberger system, but it's the first time we've talked about doing onshore. And it's all about unit cost. So if you order lots, then the cost comes down and it only makes sense. Technology is only appropriate when it works economically, and it now does.
Question here, please.
Yeah, I also have a question about the digitization. And I mean, can you sort of quantify the other people that are using it? How much is it saving them in terms of money and time and anything else?
It's a really good question. We don't know it all yet, but we can see, production uplifts, north of 10, 20, 30%. One of the wells doubled in production, but you've got to roll that out of many, many different types of wells, different reservoirs across different acreage to see what it does for you. And then we're actually creating the software internally to capture the OPEX savings. So we know what we've spent on these wells the last 5 years. Let's track how it changes now. So it's going to take us 6 or 8 months to understand what the cost benefit is as well as the increased production, hopefully. And then we'll have a much better idea to what it means. But if you look at all the published data around the world that people have used, digital systems like this, it's generally always worked. It's kind of common sense, really, that it's not a man coming along on a pickup to make a pump go quicker every month. It's doing it every 10 seconds for you. And there's a power pack there that delivers the power to speed the well up or slow it down. So it's kind of smart, but it's not really. It's common sense to use these sorts of things, to me.
Okay, time for one more question. Gentleman here, the blue shirt, please, Peter. Blue jumper.
Yeah, thank you for the presentation. You mentioned you had plenty of reserves. I was just curious to know, how does the licensing work and what's the duration of the licenses in Trinidad?
Licenses, our offshore licenses run like 35 years. And our onshore licenses run for 10. They're coming up for renewal now, end of next year. But they've been, those onshore ones have been in existence since the mid-80s and be renewed subsequently. And offshore ones, they've been in existence for 100 years probably. So Trinidad's got a very good record of renewing. What you do is you go back to the government, you know, and you can sometimes renew early actually, and say, based upon this work program we want to do, can you change some of the terms? We want to do this, we want to get after it. There's the technology we're using, there's our approach. You know, can we renew a bit quicker under better terms? So that happens all over the world.
Lovely.
Yeah.
Bruce, thank you very much indeed. Thank you.
Thank you.